Hello and welcome. You're watching the Global Reset on CNBC-TV18 Prime with me, Prashant Nair. This is the program where we examine the big picture, analyze, of course, all the global developments which are reshaping our world. As always, let me quickly begin by recapping what has happened overnight. Every day is a new one, and there is enough to talk about. It is August 1st, and the day of the tariff deadline has arrived. Now, there is an extension, though. U.S. President Donald Trump signed an executive order that modified reciprocal tariffs on several countries with updated duties ranging from 10% to 41%. The Trump administration is stuck to the 25% tariff on India, the highest in the region. However, the additional penalties which Trump had threatened to impose on India for doing business with Russia on military and oil front still remain unclear. That number remains unspecified. The revised tariff rates show that U.S. will impose 20% tariffs on Bangladesh versus 35% previously specified. Pakistan's tariff rate has also been lowered to 19% from 29%. 19% tariff on goods from Thailand and Cambodia, 20% on goods from Vietnam, and 15% on goods from Turkey. Countries that are not listed in the latest order will face an additional duty of 10%, and all goods that are considered to have been transshipped, basically sending to one country to be sort of rerouted to the U.S. to avoid applicable duties, will be subject to an additional 40% tariff rate. According to the White House, the modifications shall remain effective with respect to goods entered for consumption or withdrawn from warehouses for consumption on or after 7 days from the date of the order, which is basically the 7th of August. So in a way, it's kind of de facto a bit of an extension. Earlier, the White House press secretary said that almost 200 countries had reached out to the trade and tariff teams and added that countries which do not have a deal would hear from the administration by midnight. Take a listen.
Well, there's a lot of countries that I know have reached out. I believe it's upwards of 200 countries around the world have reached out to the trade and tariff team. Of course, as I said previously and the president said, we're going to prioritize our key trading partners, which we have done. Like I said, of the 18, 2/3 of those we have cut these tailor-made deals with. But I do know that the trade team has been working around the clock to try to be in correspondence with as many countries as possible. But if they haven't heard from us yet, they will in the form of a letter or an executive order by midnight.
Well, we reached out to the White House early this morning, and the White House has clarified to CNBC-TV18 that the reciprocal tariffs will, in fact, take effect from the 7th of August. They've also added that the 7th of August should not be read as an extension, but a way to give Customs and Border Protection ample time to implement these tariffs. So anyway, they're saying, well, this is it. The rates which have been announced is it. But market interpretation, of course, because of what we've seen back and forth, changes, etc., will be that perhaps there is time for some of these tariffs to be hopefully negotiated lower, especially in the case of India. The White House also told CNBC-TV18 that exemptions from the current or potential future sectoral tariffs and other products would remain in place. More specifically, the White House press secretary also spoke about the pharma space and that the U.S. president has written letters to pharma companies to provide the most favored pricing for American consumers.
The president signed an executive order earlier this year to solve the problem of exorbitant pharmaceutical pricing. According to recent data, the prices that Americans have been paying for brand name drugs are more than 3 times the price other similarly developed nations pay. The president is determined to solve this problem and took further action today. He has signed 17 letters to pharmaceutical companies' CEOs. Moving forward, the only thing I will accept from drug manufacturers is a commitment that provides American families immediate relief from the vastly inflated drug prices and an end to the free ride of American innovation by European and other developed nations.
Okay, joining us now to discuss this in greater detail is a pharmaceutical industry veteran, Kewal Handa, is former managing director of Pfizer here in the country. Mr. Handa, great to have you with us here. Thank you for your time. For our viewers, Mr. Handa, if I can just take a minute to explain, there are two things here. One, of course, is the sectoral tariffs which may come. So, for example, last night we heard the Commerce Secretary, Lutnick, essentially saying that President Trump will implement these pharma tariffs in the coming days and weeks. So that is one. And that'll be on all pharma, all imports into the country, into the US. The second thing, which is the new thing, is what you just heard from the White House press secretary, which is letters directly to 17 companies asking them to lower, formulations which are, which they sell to programs like the Medicaid, etc., in the US. So that is the new thing. The pharma bit is the old thing. I mean, the overall tariffs on the pharmaceutical products. I just want you to, Mr. Handa, respond to the new thing, which is this 17 companies, the letters going out. Some are of the opinion that there are Indian companies that are largely all supplying, they make generic medicines to sell into the US. But there is also some exposure that Indian pharma companies have to these 17 innovator companies. And that perhaps there will be some pressure on pricing, etc., because these companies will have to lower their prices, what they charge these programs in the US. So just your thoughts, Mr. Handa.
A very, very, very good afternoon to all of you. Just let me put in the right context. In US, there are only very few US-based companies or global companies having a footprint in US. For example, Eli Lilly has, Bristol Myers has, and few others. But companies like Pfizer, Johnson, Novartis, Bayer, they don't have a footprint in US. They operate from European and the tax haven countries, make profits there, and even the profits are not sent back to US. So that's the context why this is all coming about. Now, what Trump is saying is that whatever pricing you are charging to the developed countries, let's say in US, in Europe, you charge a similar price in US. Now, traditionally, the way I understand the pharmaceuticals, the MNCs would price their product is that they will charge higher price because based on the capacity to pay in US and a slightly lower price in Europe and lower price in the developing countries. That's how they would recover the cost of innovation and R&D, and that's how innovation and R&D was funded for so many years. Now, Trump is changing the pyramid and he's saying, look, you guys have set up outside US, your prices are higher in US, so you equate the price, and now immediately you reduce the price for Medicaid. And for the new products that you were launching, your price would be similar to the price of what is there in other Europe countries. That's one proposal. The other proposal, which is interesting, is talking about, is he's saying that, look, I will help you out with the higher prices in US, as long as you are able to repatriate profits, surplus profits, which you earn somewhere in Ireland or so, back in US. Now, so these are two parallel things are happening. The implications are far, because if there is a 15% tariff on the European companies, so if I add a 15% tariff on the European country, the cost of the product is going higher by 15%. And assuming that there is a 20% or a lower tariff, prices in Europe, the actual cost will go up to 35 to 40%. That means the margins of the US companies will dramatically come down by 30 to 40%. And so that's the implication for these 17 companies as of now. As far as the India is concerned, I don't think so there's a major implication. I've heard about Sun having one product called Elimia, which is about 5,000 crores in US. And for that, it may have its impact. But otherwise, India sells more of the branded generic, almost contribute about 47% to the US requirement. So they may not have any major impact. Now we come to the sectoral thing. That's another story.
So what you're saying is, if this is implemented, right, so these companies are all based out of Europe, etc., for tax reasons. And I think that is the reason why, I mean, as you said, a lot of these companies are based out of Switzerland. Because Switzerland got hit by tariffs, and people were wondering what happened, because I think the Swiss run a deficit with the US. The US does not have a deficit. The Swiss have a deficit, but they were still hit with which means US runs a surplus, but still Switzerland was hit with a tariff, and this is the reason primarily. The companies are based there because of lower taxation, etc. My question, and what you're saying, Mr. Handa, is if there are two impacts: one, 15% higher broader tariff if things go up, and if you are asked to match prices of drugs in terms of what they charge, right? So it could be 15 plus 20 or whatever combination it is. So it's a double whammy if it goes through. That's what you're telling us. In the case of Sun, what an analyst from Macquarie told us, Sun has a 20% exposure to these companies, sort of, formulations and these innovator companies, and we'll have to sort of go through details for others as well. So it's not non-negligible. It is a pretty sizable sort of number there.
Absolutely, and Sun has manufacturing facilities not in US but somewhere else in Atlanta, I think so. Now the challenge would be, I don't know whether letter has been issued to Sun. If the letter has not been issued to Sun, then it's slightly out of radar at this point of time. But they will catch up on that, and they will try to issue letters for all the companies whose prices in US is higher than the European prices. So in that case, the Sun will get trapped.
Yeah. Sun will get, but is there an indirect impact? I mean, do Indian pharma companies supply stuff to, say, a Eli Lilly or a Merck or a Novartis, etc.?
So, very good question. The indirect impact is now if these companies are buying products, let's say from India or from China or somewhere else, now they are going to really put pressure on these countries to reduce the prices of the cost. Now, that would be an impact. Now, if some of these APIs also are being imported from US, and if these imports also go up, so let's say at 25%, then for Indian companies to service these MNCs would be very difficult.
I think that 20% which the analyst pointed out is this exposure.
Yeah.
It could be this exposure, right? The indirect, what they supply in terms of APIs, etc., building blocks to these global companies.
So maybe that is the exposure they are talking about.
Yeah.
I'm not aware of this.
But in your experience, I mean, without going into numbers, would this be meaningful across? I mean, at least 10, 15%, north of 10, 15, 20% across the larger companies?
No. From Indian companies, there's a letter of 17. I don't see a major impact. Let's not, get into that. Indian company,
Mr. Handa, we're losing the line there. We'll try and I'll just come to you as soon as I'm told that the line is fine. But Mr. Handa is essentially making a couple of points here. He's saying that there perhaps could be an indirect impact, but he does. At the end of the day, it doesn't look like it's going to be very meaningful. But of course, it depends on what is finally done. Mr. Handa, can you hear me, sir? Mr. Handa, can you hear me, sir?
Can you hear me? Yeah, I can hear you.
Go on, sir. Sorry, I lost you there. So that's why I took over. Please.
I'm saying that for Indian company, if it's going to be 25% plus 10%, it's going to be cost of medicine is going to be higher in US, which Trump will have to face that because these are generic medicines. And then the generic medicine cost going up almost 35% is going to be a major impact on the supply chain and also availability of certain essential medicines. This is for the US. As far as the India is concerned, the margins will dramatically come down by almost about 35%. So that's going to be a major impact. For biosimilars, if it is going to be 35%, I think they will be almost out of the US market because they will not be able to sustain the margins. So Indian companies will have to find new geographical areas to reach out, and they need to increase their reach in, let's say, in BRIC countries, in Europe, in Japan, and so on and so forth. That could be a big challenge for the Indian companies.
By the way, yeah, no, absolutely. I think the line's a little weak. I had one more question. I'll just try and take it, Mr. Handa. There is this Section 232. Under which there are these broader sectoral tariffs in which pharma is also included, which I began by saying are also likely to come, right? So that'll impact everybody. Forget about this indirect impact, etc. Any thoughts on that?
Yeah, I think that Section 232 for pharmaceutical and semiconductors is going to impact India the most, really. And we need to see what's the finding of that investigation is. And that also is applicable to the multinational companies also. So I think that's something that we need to wait and see what the findings are.
Yeah. We'll have to see. I mean, I remember speaking to Mr. S. Ramesh of Lupin a few weeks ago, actually a couple of months ago, and he said that in his estimation, the cost of making in the US is about 8 times the cost of making in India, like to like. So even if tariffs go up a little bit, I mean, in terms of just sheer competitiveness, I mean, there is no match really. But in any case, the direction of travel in terms of tariffs seems to be higher. How much is the question? Mr. Handa, a little patchy line towards the end, but I think we got the thrust of the points that you're making. Really appreciate you joining us here. Thank you for joining us. We'll take a quick commercial break here. We're going to come back. We focus on pharma for now, and we're going to widen the scope a little bit on overall tariffs. Jahangir Aziz of JPMorgan coming up. Welcome back. You're with us here in the Global Reset. In the earlier segment, we spoke about pharma tariffs and what perhaps will happen going forward. But let's just, as I said, widen the gaze a little bit with Jahangir Aziz, Head of Emerging Markets Economics Research at JPMorgan. Jahangir, welcome back. Thanks very much for joining us. What we've seen this morning is effectively, in a way, another extension. 1st of August has now become 7th of August. Your first thoughts on whether we will be able to use this period to negotiate tariffs lower?
Sure. I mean, I'm guessing that's the objective of giving 7 more days before it goes into effect. And, I'm sure that in the 7 days, there'll be frenetic negotiations going on to bring down the rates down. And obviously it depends on what concessions and what preferential treatment that India provides to the US.
It's an impossible question to answer, but I'm going to ask it. In your mind, is there a possibility that in these days, we perhaps are able to lower and negotiate these rates lower, the 25% number?
Very difficult to say that, right? I mean, look, I'm not in the weeds of the negotiations. I don't have any insight. But, reading from news articles, reading from what other people are talking about, clearly the sticky point happens to be agriculture, right? So, it is very hard to see India give up the kind of demands that it has, which is that, on genetically modified things, on dairy products, because it's not just a question of India allowing these products to enter into the country, that India does not really have an infrastructure that is capable of detecting it, making sure that it doesn't get transferred to non-GM products. And at the end of the day, we also have to keep in mind that we have other export markets where they have zero tolerance for GM modified products that I'm talking about the EU that are not permitted by them. So it's a very tricky thing. And on top of that, I'm guessing that the US wants an immediate reduction in tariffs. My guess is that India would want a much slower adaptation to lower set of tariffs. And the last bit, I think, which is something that is lost in all of these discussions, is that by no stretch of the imagination one can call this a free trade agreement. If it's not a free trade agreement, then at least not in the way in which the WTO defines what a free trade agreement is, then India is obliged to extend these preferential tariffs to other most favored nation countries, most favored nations' trade partners. So all of these factors will have to be taken into account. And I can understand why the reluctance on the Indian side, but I don't really see what other place would India get stuck with the US on these deals.
Jahangir, what about the additional penalty that President Trump had announced on account of sort of Russia? Do you think that is still sort of an issue which is alive, and we'll see an actual number there, the penalty?
I would think so. I mean, this is much more serious. Obviously, India's got caught in the crossfires, just as Turkey, Brazil, China caught in the crossfire. It has obviously very little to do with India per se, but it's obviously directed towards trying to find towards Russia, U.S.-Russia relationships, and has to do with Ukraine. But my sense is that that penalty was probably going to be there unless India is able to make commitments, which I'm again absolutely not sure what commitments that it can make to get the penalty off.
Jahangir, even if the 25% tariff for India is negotiated to say under 20%, when we started all of this in March, April, it looked like we perhaps would come out ahead. So either we are going to be at par with other countries, competing countries, exporters, etc., or perhaps, at a slight disadvantage. Do you agree with that?
Yeah, so I mean, it depends on the product, right? So look at the 5 major categories of products where India really exports to the US, right? So it's pharmaceuticals, it's electronics, it's textiles, it's gems and jewelry, right? So on electronics, if you remember, just after the April 2nd tariffs, I think about 2 weeks later, there was a whole host of electronic articles that were exempt. So the question is, do the same exemptions hold for India? If the same exemptions holds for India, then I think India is not at a disadvantage vis-a-vis, let's say, Vietnam or China or some other countries where it will compete in that electronic space. I don't think in gems and jewelry was never exempted for any country. So all countries more or less are going to probably, India's competitors are also paying more or less the 20-15% tariff. So that's not really where there is a problem. Similarly with textiles. Textiles was never exempted. So again, India's competitors is again, where, you are not going to see a huge difference between the tariff rates of India versus India's competitors. So that brings us to pharmaceuticals, where I think, the big pharmaceutical competitors to India at the generic level are Euro area and Canada. And again, in the case of Canada, I'm not exactly sure where that has to do with US, with falls under USMCA. If it falls under USMCA, yes, there is some disadvantage, but then, Canada is facing a 35% tariff rate on non-USMCA related goods. In the case of Europe, again, it's a 15% tariff rate versus 20% or 25% in India. I don't really think it is going to matter that much in terms of relative disadvantage. What it will really matter is how much demand for Indian products, along with that of European products or any other country's products, actually decline because US consumers will have to pay this 15 to 20% added tariff or increased prices. I think that's where the concern is. And I think more or less all these countries probably will face, equally the brunt of the tariff increases.
Jahangir, finally, just to wrap it up, right? And we've talked about this earlier. Where are these tariffs, average import tariffs into the US finally landing at? 15 to 20% still? Closer to 20, closer to 15?
Well, I mean we really sort of started looking at the 15% being repeated over and over again. And again, our view was that as long as you are not trans-shipping things from China or any other country, I think the 15-20% range is probably the average range. If you're trans-shipping, then the rate is going to be exactly the same of that of China, which is 40%. And I think more or less everything is falling into that sort of narrow band. Again, some countries are 15, some countries are 20, some countries are 25. But broadly in that range, things are falling so far. So 15, 20%. Now, these are country-specific tariffs. I think what we're forgetting is that there is still the sectoral tariffs, which is on steel, aluminum, copper, auto parts, and what we haven't seen so far, but most likely is in the pipeline, global sectoral tariffs on semiconductors, global sectoral tariffs on pharmaceuticals. So obviously, semiconductor is not something that India should be bothered with, but clearly aluminum, steel, and definitely pharmaceuticals is where I think India will have to face. We haven't seen those tariffs as yet. Those tariffs can easily be more than 25%. As you know, steel, aluminum, and copper is at 50%. So we'll have to wait when those tariffs are announced. And our sense is that it's probably sometime in the month of August that those sectoral tariffs are announced. If you add those sectoral tariffs, then depending upon who is exposed most, for example, in the case of India, it'll be mostly through pharmaceuticals, steel and aluminum, much less through semiconductors. In the case of Taiwan and others, it'll be through semiconductors, etc. So we'll have to wait and see which countries expose most. But my sense is that average effective tariff in the US is still headed towards that 18-20% range overall.
Yeah, no, absolutely. Those sectoral tariffs will make all the difference in terms of whether it is, 15 or whether it is, as you said, between 18 to 20%, even higher. Who knows? Jahangir, thank you very much for joining us. It's a pleasure having you here on CNBC TV18 Prime. Well, I think it's a wrap on this edition of the Global Reset. Thank you very much for staying with us through this episode. More comes up on the other side.